Good evening, everyone. This is Rebecca Smith-Aldridge. I'm the Executive Director of the Mid-Hudson Library System, and I've spent the past 20-odd years helping libraries with a variety of things, including passing budget votes, budgeting for the future, and making sure that we're being accountable and transparent in the use of public funds. So our goal here tonight is to do what we call an intermediate level trustee workshop on the topic of financial and fiduciary responsibility. I can see from the list of trustees that are joining us here tonight, we have trustees who currently serve as treasurers of their board, others who do not. Some of you are fairly new trustees, others have been on the board for quite some time. We even have some directors in the audience tonight. So I can tell you, I'm really looking forward to the questions that we're going to get tonight. Casey's going to moderate the questions. So anytime a question comes up in your mind, go ahead and put that in the questions or chat box that you see in the software. And we'll be pausing occasionally to address those questions that you may have. We're going to do our best to keep things kind of at a basic factual level for you tonight. We understand that some people get a little freaked out when we start talking about money, and they are so concerned about doing things right that it might be something you want to hear 2 or 3 times. So as Casey said, it will be recorded. And the most important thing I want to say to you is that Casey and I are here for you as a resource, of course, after the workshop tonight. So if you check your notes later, or you have a lingering issue, or you have something very specific about your library that maybe you don't think is appropriate to ask in the workshop setting, feel free to contact us after the workshop. We're happy to chat with you and help you figure things out if something wasn't clear enough for you. We've also sent you a series of handouts related to tonight's content, so you have a lot of reference tools after the workshop. And we're occasionally going to refer to things, but I want to point out right away that you should have received a copy of the slides we're going to look at tonight with spots to take notes, a handout packet that has some of the more wordy slides blown up so you can actually read the fine print, as well as some other resources in those handout packets. So I may be referring to some of those things. Just wanted to mention that to you, that if you didn't maybe download some of that stuff before the workshop, that you might want to do so as we go through this, or make sure your hand doesn't cramp up writing a bunch of notes that are already taken for you on the slides here. So I'm going to go ahead and get started, Casey, unless you see anything that's causing a problem for people.
No, I think we're good to get started. Everybody looks okay for the most part.
Awesome. Thank you so much. So I wanted to start by just sharing a little story. At Mid-Hudson, we used to, before times, before COVID, do something called the Friends Support Group. So the Friends groups of our member libraries would come together and learn from one another and from system staff and guest speakers. And one of our sessions, we focused on finances for Friends. And about halfway through the workshop, one of the members of the Friends group from a member library raised their hand and said, "Can I ask the group a question? It seems like many of you have bank accounts." And everyone's very polite in the room and are nodding, yes, we have bank accounts. And so I politely asked, "Well, if you don't have a bank account, how are you handling this?" And she said that they take all the money from the book sale and put it in a cash box, and that she keeps it in her closet at home. And so I tried to diplomatically point out that people give money to the Friends groups to benefit the library, and they want to see it put to good use. And so, libraries are using bank accounts to make sure it's protected and overseen properly. And I said, "How might you explain that to a donor?" And she explained that she has a very feisty attack cat that likes to sleep on top of the cash box. And that's how she assures her fellow board members of the Friends group that the money is well taken care of. And so I just tell that story to illustrate, what the perception might be if people find out that how you handle what truly is their money, whether it be public dollars coming from a tax source or from a private donor, what their perception of how you handle that money may be if you aren't, I think, up to par with some of the basic standard regulations and laws that govern finances for libraries. Because I think, one of the things I always try to remind people is that it's not your money, it's not the board's money, and to some degree, it's not even the library's money. It's the public's money that they've entrusted to you to produce quality library service on their behalf. Now, we don't expect every trustee of every member library to be a certified public accountant or have a financial background, but we do expect all trustees to exercise reasonable controls on the finances of the library. And so that's what we're going to focus on tonight. We're not looking for superhuman effort in this area. We're looking for what a reasonable person, perhaps a taxpayer or your neighbor, would expect to see when they take a look at how you're handling the money that helps to make the library possible. It's one of the major job components of a trustee. We understand you are volunteers, but there are, I think, guidance and rules that govern that volunteer job, particularly because you are dealing with the public's money. And you see, providing fiscal oversight is one of the primary roles that you play at the board level. And I think that's one of the things that makes libraries so successful, is because you know how hard your neighbors work for every penny that they earn, and that they don't lightly vote yes, and that they don't lightly donate to your library, that you take that very seriously, which is why the governance model in New York State for libraries works so well, because you are that person. That is you. It's your money too that's been put towards the library to produce something wonderful for everyone in the community. So thinking about this role of fiduciary, which is truly what you are, this fiduciary accountability that you are charged with, it might, make you sit up straight and take notice, of course, but at the end of the day, what you're charged with doing is making sure that the financial resources that have been entrusted to you are being used efficiently and effectively. And what we're going to talk about tonight are those things you can put in place to make sure that happens. I think one of the most important things to keep in mind is that you've got a qualified library director, hopefully by your side, who understands the ins and outs for the most part of what this should look like. You can see tonight we've got multiple library directors in this course, some of whom have taken this course before because they've made a true study of this topic, and they want to make sure they're a good partner with you to do this work. So you're not alone in this work. We will be talking not only about your role and the director's role, but also the opportunity to have third-party consultants helping you with this role, from your certified public accountant doing an audit for you or a financial review on a regular basis. We'll talk a bit about audits tonight, as well as the oversight role of the Office of the State Comptroller and the many resources they produce to help your organization do this work. So we'll point out those resources for you along the way and help you see where just the routine actions of your board help to create the safety net to ensure that those funds are being used efficiently and effectively. So in New York State, 93% of public library revenues are from public funds. And that's something that some libraries in our system might not realize. We do have about, I'm going to say, half a dozen libraries where that is not the case, where they're still relying on fundraising to make pay the bills and keep the lights on and keep the staff paid, which is a nerve-wracking endeavor for them. But I think regardless of whether it's public dollars or private dollars that you are entrusted with, I think your oversight standards should be the same. And I am going to point out in a few cases here tonight where there are laws that apply to public libraries but not association libraries. But I'm going to remind all the trustees who are on the line from association libraries that you are receiving the majority of your funding from a public source. And it is my very strong opinion that association libraries should follow the same laws and guidance as public libraries, because regardless of the fact the laws haven't caught up with the fact that association libraries are now better funded and more stably funded, thanks to the ability to go directly to the voters for their appropriations. I think that it's up to local library boards to create that standard for themselves and hold themselves to the higher standard, even when they don't have to. And so noting that stable funding is, of course, the funding that's voted on by your taxpayers, so they lock in that money. You can depend on it from year to year. We also have a very small number of libraries in our system which have to negotiate the majority of their operating aid every year with the municipality, which is a precarious position to be in. And then, of course, there's supplemental funds from fundraising. Perhaps you're collecting fines or have other charges for copies or faxing that you take in over time. Regardless of the source, it all needs to be overseen in a very responsible way. My dad was a library board president for about a dozen years at the Pleasant Valley Library. I know this was the thing that he took the most care with, to ensure that the money was well taken care of and that he could look his neighbors in the eye and say, yes, we understand where the money is, how it was used, and what outcome that we achieved with that money. And I know that most of you, if not all of you on the call, feel exactly the same way. So there are definitely laws that intersect with your fiduciary responsibility, and you'll find in your handout a list of what we'll call critical laws that intersect with the financial responsibility of public library boards and association library boards. And we'll dive into some of them deeper than others here this evening. But I thought you might like to have that as a reference, because sometimes you'll find, you're questioning, why do we do things this way? And it may be because it's just always been done that way and it's a common practice your bookkeeper set up. But other times you're doing it that way because the law says you need to do it that way, or regulation says you need to do it that way. And that regulation is what you might be audited against by the Office of the State Comptroller, particularly in the case of public libraries. So what I've done here tonight is kind of like the greatest hits version of the critical laws handout to make sure that you see where the intersections are with some of the practices you might have already picked up on, where you might find that there might be some work to be done, perhaps by a policy or finance committee of your board. And I'll just say that it's always a work in progress, right? It's something that you always want to iterate on and make sure you're learning about and paying attention to, and that if you see something in the Mid-Hudson Bulletin or your director brings you a piece of information about a law or regulation that's changed, that we make sure at the local board level your practices, procedures, and policies also keep up with those changes. And that's something that often people who attend this workshop discover, that they've been doing something a certain way, a law or regulation has changed a bit, and oh, it doesn't look like that at my library. Do I have to change too? And it's very possible the answer may be yes. So you might find that happen for your library tonight as well. And I just want to say, don't freak out. It's you're doing your best effort as a volunteer trustee, and that's what people are looking for, that care and concern the average person would have when dealing with other people's money. So the very first thing we want to talk about is the importance of transparency, which you hear us talk about at almost every Mid-Hudson Library System Trustee Education Series event, because we believe so strongly in the fact that shining a light on the work that you're doing is the quickest way to help people feel confident or comfortable they understand that the library is doing their best on their behalf. And so you'll see, two laws right away that you've heard about at the Trustee Essentials workshop that we do. Open meetings law and freedom of information law are very much tied in to the financial transparency of your organization. From allowing people to come into your meetings and watch how you make decisions, to fulfilling requests for information someone might have if a member of your community wants to understand how you arrived at a decision or what options were in a bidding process. There should be no reason to hide that information, right? You always want to be above board and very open about how the decisions are being arrived at. And so it's just another opportunity for us to caution all boards against making decisions via email or on the phone when no one's watching or in executive session. We'd like you to be thinking and talking as much as possible out in the open in committee meetings and board meetings where they're being observable, at least by the public. I will note that the freedom of information law, I can already tell someone's going to ask me this question. Technically, association libraries don't fall under the freedom of information law, which is, I think, silly. But it's something to note that for association libraries, your FOIL or freedom of information law policy for your organization may not even exist. And my recommendation to you is to adopt a policy. And we have models on our website for association libraries that note that while you're not required to follow FOIL, that you do so in good faith to the extent practicable by your organization. It's just another one of those signals to the community that you have nothing to hide, which is important to do before questions are raised about how you're doing things. Other aspects of being transparent we've got listed here, and we're going to dive into some of these more deeply tonight, from your budget process, how that's handled, how it's discussed, how you approve the budget at the end of the day, your audit process we're going to talk more about tonight, the visibility of your reserve funds we're also going to talk about tonight. It's something that is a little mysterious to some library boards, it seems. The fact that we now are all required to file a conflict of interest disclosure form, which is something that might be an asterisk for you, to make sure you go back and double check your library's conflict of interest policy and make sure it's up to date with the newest law, which was passed in 2014. If you've been on the board for more than a year and you haven't signed a conflict of interest disclosure form, that's a very big clue that your policy might be out of date. So that might be something to put on your to-do list, or at least to explore to make sure it's up to date. And having a whistleblower policy, interestingly enough, not required for all libraries, only those with 50 or more employees. But again, really solid practice for all libraries, regardless of how many employees you have. You want to create an open environment in which, whether it's a staff person, a trustee, or a consultant that you're working with, who notices that something doesn't look right, or they think something, just kind of smells funny when it comes to the finances of the library, you want that public statement that you welcome someone approaching the board and raising their hand and saying, I think something's off here. We need to look into it more, without feeling like they might lose their job for speaking up. So particularly for staff, I think it's important to have that policy regardless of the size of your staff. So another place where library directors and boards don't thank me is when I add things to your policy checklist that should be there, but I never do it without a reason. I really just think it starts to tell the story of what kind of board you are, what kind of culture you're cultivating. And I think erring on the side of transparency and accountability is rarely the wrong thing to do. So at your board meetings, you have a lot of opportunities to both do an awesome job and to raise questions for the public who are watching you do the business of the library. And you've heard us talk about effective board meeting strategies at other workshops we do here at Mid-Hudson. So I'm not going to belabor this one, but I'm just going to reiterate the point that every trustee is responsible for the library's finances, not just the treasurer. While there are those hardy souls who step up to be the board treasurer, and for public libraries, you may have a paid treasurer and appointed fiscal officer amongst your elected trustees. That role needs to be owned by everybody in the organization. While you might not do the hands-on work, you do want to make sure that you're respecting the role of the treasurer or that finance officer and the director, understanding the strengths they bring to that situation. Make sure you actually are reading the financial reports that you get on a monthly basis and going ahead and asking questions if you don't understand something. When you get that report, read it right away. If you've got questions, reach out to your treasurer or director before your board meeting, get it straightened out, find out if it's an issue that should be brought up during the board meeting, and help elevate the understanding of everyone on the board of issues that might not be completely clear in that financial report. Your peers on the board will thank you, because many of them might be shy about asking the question, or they might think that, oh, everyone knows that but me, I should know that, I'll just be quiet. You might be surprised to find that many of your peers might not understand something and have not felt confident to speak up about that. But that's exactly the role we're asking you to play, is to question things until you understand. You can do that at board meetings, you can do that before board meetings, you can do that in committees, but make sure you understand what you're taking a look at, because chances are if you don't understand a report, the average person in the public who might want to know a little more about how their money is being spent, if they don't understand that either, it's a good sign that maybe a report might need to be adjusted or clarified or added a footnote. We've definitely seen that happen at the Mid-Hudson Library System board meetings, where we get a brand new trustee, they ask a question, and all of a sudden everyone's like, I've always wondered that too. And the staff is like, oh my goodness. So let's footnote that and make sure that's more clear. The other thing we're going to talk about a little more tonight, I prepared for you I'll just share this right now, that one of my really strange hobbies is reading all of the audits that the Office of the State Comptroller does of libraries. I actually thoroughly enjoy it. I always learn something. And so I've actually put together for you the top 5 most common findings in those audits of libraries, which you'll be glad that none of them are about your library. And so you can learn about them before you might get audited. But one of the things that they point out quite often that we'll talk more about later in the evening is making sure the board approves all expenditures that are made. And that's called the claims audit process. And you notice that one of the resources we sent you before this evening is related to that. There's a whole little local government management guide related to the claims audit process and improving that process. And it's very common that you may find there might need to be adjustments made for your library's process to make sure that items are getting approved perhaps before they're paid. So we'll dive into that one a little more, because we found over time that's been an area with a lot of questions for trustees. The other thing that you need to be cognizant of is you do need to have an annual reorganizational meeting. And I've seen that more and more libraries are on the ball in doing this. And there's 3 things we want to make sure definitely happen at that reorganizational meeting: that you actually authorize what they call prepays, and I'm going to itemize those for you so you know what they are by law, petty cash, and director's discretionary funds. So those are things that the director would not have to come back to you for approval for. And we're going to go over in detail what those things are tonight. And every year you want to confirm your banking institution, so all board members know what banking institutions are being used by the library, and which is the newspaper of record for your organization. So that's in the minutes, and that people understand that's where your meetings are going to be advertised. Those are things that can often get overlooked when there's turnover of your director or major turnover of leadership on your board. So just a reminder to make sure those things happen every year. The financial reports that you receive on a monthly basis for your library board work should have some key elements to them. So I put together this checklist to hopefully reflect what you're seeing on a regular basis, which is bank account reconciliation, so that you're aware of recent activity and that you see the status on all of the library's accounts. And I emphasize the word all, because as many of you know, I attend a lot of library board meetings when you ask me to come and help out with something. And what I've noticed is that many libraries' financial reports often talk about the operating accounts or perhaps the capital account, but they're not showing other reserve accounts. And so just a reminder that you should see information about all library accounts on a routine basis. So you're seeing the status of them and the bottom line on those, not just at the end of the year when it might be too late to notice that something is going wrong. So you're probably very familiar with seeing a report that itemizes your revenues and expenditures. And hopefully you're seeing a report that has month-to-month details, so you can measure against what you approved in the budget versus what's been received, which is going to then obviously very much inform what's been expended. So you're making sure things are even. But your common revenue lines would probably be your tax revenues as the largest source. And then there's obviously other more minor aspects of revenue that, depending on the size of your library, may not feel so minor to you, right? The smaller the library, the bigger each of these lines matters to the overall picture of your financial health. So you'll probably see a line for fines and fees, donations that are coming in, interest you might earn on your accounts, and there may be other anticipated revenues, such as maybe you have a friends group who routinely donates to the library, and you can pretty much estimate how much you'll receive from year to year. And then of course, there's always the windfalls that we all hope for, right? Unanticipated revenue, where perhaps a grant opportunity cropped up and the library director was able to secure a grant that wasn't anticipated at the beginning of the year, but was able to be introduced at some point later in the year for your review. And then your expenditures, obviously there's the in stream and then the out stream of where the money goes. And again, you want to be able to compare that information. So you want to be able to see what you budgeted in certain categories, what's been expended to date, and what might be encumbered for the future in the year. So you have a true picture of what your cash position is at that month. And so this is something that I think the smaller your library, the harder this might be, because you'll want to make sure your library is using a modified accrual accounting system, which I'll explain in a second. But that's what we mean by also showing encumbrances, not just what's been spent and paid for and now it's off the books, but what might be something that you already know you're going to have to pay for later in the year. An example might be a bill that gets billed quarterly, and so you have to encumber enough money to make perhaps the second and third and fourth quarter payments, right? So you'd want to encumber the money that needs to be there to pay that bill at that pace. So that's what we mean by an encumbrance, what you are committed to pay. And then an item that can be very helpful is to have a column that indicates the percentage remaining for each budget line, or the reverse, the percentage spent, but usually it's the percent remainder, which can be a very good indicator for you of the health of the budget. There's certain lines that get spent at a certain pace as the year progresses. So a great example might be your personnel line, which has a very even payout. You're paying out the same amount each pay period and therefore each month. Whereas a programming line might have a much different pace. You might have a lot of money being spent in the first half of the year to prepare for the summer reading program. And so your youth services programming might take up a big chunk at the first half of the year, and the pace might look different of paying out for the remainder of the year. And so the longer you spend on the board, the more you get a feel for the pace of some of the budget lines. So that's always a good spot as a new trustee, if you're confused about that, to ask a question. Like, hey, how come come there's no money left in the tech line? Well, that's because we bought everything at the beginning of the year and paid our tech contract in full at the beginning of the year, and we don't anticipate many expenditures further on down the fiscal year. So those are the kinds of questions that are completely appropriate to make sure you understand the numbers or the percentages that you see on those financial reports. The other financial report you should see is what they call a warrant for most boards. Some boards call it a voucher, but it would be a list of all the bills that are going to be paid that month for the trustees to be a part of the checks and balances procedure, which is a big part of the fiduciary responsibility. So I'll just describe this process at the Mid-Hudson Library System at our own board level. It might not look exactly the same at your library, but I think you're going to get the idea of what I'm going for here when I describe this. But this all started with perhaps a bad joke by a former executive director of the Mid-Hudson Library System, who said that there's not too much money in libraries. So once you split the oversight of the funds amongst 3 people, it's not worth stealing. And so it might be an odd way to think about it, but it's a good way to think about the fact of checks and balances, that if you have at least 3 people involved in a process, they would really have to take some extra effort to collude, to have funds go missing or into the wrong place or the wrong hands. So at Mid-Hudson, we have a fiscal officer and a fiscal assistant who manage ordering and then paying bills. Bills, however, don't get paid until I review everything that's about to be paid to make sure it matches up with invoices that we have. And then we have a member of our board who also reviews that. And we rotate that board member every month. So it's a different trustee looking every month, that the items we're about to pay are going to vendors with names we recognize, that has paperwork that backs up the expenditure. And now you've got at least 3, and in our case at Mid-Hudson, 4 people now who have overseen both the order, the receipt of the item, and the payment of the item. And we've all been held accountable for that, and we have to sign off and initial that. Now, of course, that warrant is available to any trustee who wants to take a look at it, but one is assigned the responsibility on a monthly basis. Now, there's some things that you're not required by law to review on a monthly basis before it is paid. And that's when we talk about prepays, vouchers, and payroll warrants. So the payroll you authorize at the beginning of the year by your approval of the budget, as well as a salary chart for the year. So you don't have to approve every single payroll that goes out. It would also mean if you did have to do that, you'd have to meet an awful lot more as a board, and I'm sure no one wants that. So that is allowable to approve at the beginning of the year, and then the bookkeeper can just go and make that happen. The prepays we're going to talk about in just a minute. Those are very limited things that you can all agree at your reorganizational meeting that you're okay for the director to just go ahead and pay those because they are known expenses. It might be contractual issues, your electric bill, things like that that are predictable, but we'll itemize those for you. This is what I talked about before. I just wanted to spell it out for you. There's 2 modes of accounting that you might experience at the library. One is cash accounting, but the recommended model is modified accrual accounting, which means that expenditures are recognized in the period the associated liability is incurred. So that's the encumbrance issue that we talked about before. Some smaller libraries are still using cash accounting, which means they record the money when it comes in, they record the money when it goes out and not before, which truly does not give you a full picture of your financial position. So if you're a smaller library and you recognize that might be the case, you might want to work to evolve the accounting standard to include in those encumbrances so you have a better picture of what your financial position is moving forward. So Casey, I'm going to pause here and see if any questions have come up before we dive into reserve funds, investments, and financial controls.
Okay, good breaking point, I think. So if anybody has any questions, you can put them in the chat box or in the question box if you've been holding on to them. But of course, you can add them in or put them into those boxes as you have them. We did have one question come up a couple minutes back, and it was regarding the conflict of interest. And what do you do regarding a conflict of interest if you just don't have one? If you don't have a conflict of interest?
If you don't have a conflict of interest, you'll still want to fill out the form to indicate that's the case. You can just write not applicable to all of the questions that are asked of you, but you will want to have that on record in writing on an annual basis. And also remember that if a conflict, and we're just talking about a financial conflict of interest, if it did arise, later in the year, you can always amend your form later. But you would want to have the standard no conflict recorded in writing and on file at the library.
Okay, good. So that was the only question that we had so far, and I haven't seen any other questions come in
All right.
at this break.
Sounds good. People are taking it easy on me tonight. I appreciate that. It's been a long day. So let's talk a little bit about reserve funds, because I had noted earlier that sometimes your financial reports might not be showing the reserve funds, and we want to make sure those are transparent, of course. That was the first mention of reserve funds. But I wanted to assure you that reserve funds are not only allowed, they are encouraged, but they have to be justified. So I wanted to share with you some typical use of reserve funds, why you might have a reserve fund, and the appropriate use and transparency related to reserves. Because I will say, and for many of you, I'm looking at the list of who's here tonight, who are at association libraries who have done capital campaigns or who have gone out for irregular budget increase votes, you will get asked, why are you sitting on all this money? What's that there for? Why are you asking for more when you've already got all that money sitting there? You want to have a very good answer to that question. So typical uses for reserve funds, number one is cash flow. And that's called a fund balance. And that's because many libraries in our system have a when their revenue arrives doesn't always line up beautifully with the fiscal year, right? Most libraries in our system have a calendar fiscal year of January to December, but the tax revenues that your town or school district may collect on your behalf likely are not arriving in January, right? They haven't sent out the bills yet even then. So you might not be getting your cash that you are legally required to receive from that taxing authority, and most likely until the second quarter, and sometimes even a little later in some cases in our system. So you need cash flow to pay the bills between the 1st of January until that revenue arrives. So that's what we mean by cash flow. So adopting a fund balance policy is important, that you set the level at which the funds will be reserved in that fund balance. So if we think that through, maybe you want to have 50% of your operating expenses in a fund balance to make sure you have cash flow until that year's money arrives from the taxing authority. That would be a justifiable reason to have money sitting in account, because you obviously need it for the operation of the library and to make good on the bills that you have incurred. That is absolutely allowable and obviously recommended, so that you don't have to have a line of credit and perhaps pay interest on money you're borrowing to make the ends meet there during that period of the fiscal year. The other reason to have a reserve fund, and this would be a separate reserve fund, would be for future significant expenses. So I would hazard a guess that most of the libraries on the line tonight have a capital fund where you are diligently, just like the squirrel, right, saving money for that day when you're going to need it, and stocking a little bit of money in there every year to make sure when big capital expenses occur, which you know they will, like your roof or maybe a furnace or boiler, part of your HVAC system. These are all things that have natural end of useful life, just like in your home. You know you'll have to replace the roof eventually. And so having a capital fund where you're saving up a little bit every year so that when those big ticket items come to bear, you're prepared and you've got the money to deal with those things. You might even have larger capital goals for perhaps renovation or expansion, and you can be saving money on a regular basis in a capital fund. However, you'll want to keep in mind that a capital fund needs to be authorized by the board, so you need to have a formal vote to create it, and you should have a policy that governs it. What is it for? My recommendation is that you tie it to a board-approved facility plan. We have a sample facility plan outlined for you if your library doesn't have one, but the basics of it is that you're capturing the year that you think you're going to need the money for the roof. You're capturing perhaps other work that needs to be done in the building, whether it's related to energy efficiency or accessibility issues, and perhaps also starting to capture the vision for the larger projects, renovation or expansion that may need to be done. So you have a very justifiable roadmap for why you're saving money on a regular basis. So there's someone challenged you of why do you have $250,000 sitting in the capital fund? You can easily show them through that facility plan. Well, we've got these upcoming costs. We've got a roof that has to be replaced about 5 years from now. The parking lot has to be resurfaced. The children's room is not fully accessible to people with disabilities. So you build that case for why that money is being saved. Even if it's a more general view of like, we know we're out of space, here's how we know we're out of space, and we need to save money to offset the costs of that project, either from a public library perspective where you might be thinking, I could avoid doing a building referendum, or I'd like to reduce the amount of the building referendum because of the savings fund that we have, or you might need cash flow for matching grants for construction, or as association libraries are often confronted with, you're going to be doing a capital campaign and raising all of the money and using your capital fund as the holding place for that. That's obviously a very smart place to have a separate fund tied to that facility plan, so it's completely justifiable. The third most common type of reserve fund is a contingency fund, which many of you might refer to as a rainy day fund, right? That, you know, sometimes really tough stuff happens. Maybe a major funder for an association library doesn't come through, or maybe a pandemic hits and your county isn't able to give you all of the county money that usually comes in, or the state cuts back on funding like they did this year, which might significantly impact your revenue stream in one way or another. All these are, some of these are hypothetical, some of them are happening right now. But that contingency fund might be for those extreme cases where it was an unpredictable thing to some degree, but we all know the unpredictable can happen at any time. It's the very nature of disruption. So you'd want to have perhaps a contingency fund that allows for perhaps 10% of your operating aid saved in a savings account for really extreme cases like that. And again, you'd want to authorize that fund by a board action and have a policy that's board approved that oversees that, that sets the level at which you would save money in that fund and make it very clear what the reasonable uses of that money are. And there are examples of these types of policies on our website. We have the link for you later. Casey's going to pop it in the chat box. So again, just to cover that appropriate use and transparency, is it justifiable? Is it board authorized? And are you publicly accounting for it using what they call GASB standards, right? The general accounting standards, which your accountant follows when auditing you and providing financial reports for your board. So that's the kind of reserve fund tutorial in a nutshell. A common question we get in this area, because for school districts, there are limits on reserve funds. There are no legal limits on reserve funds for libraries, either public or association libraries. However, I would say as the fiduciary governance role that you are playing as a board, you would want to set limits through policy to make sure it's justifiable and explainable to the taxpayer, so they understand why the money's sitting there and why you still need to come back on a regular basis to ask for increases from them to cover operational costs, which just, you know, go up without necessarily any control that the board might have. It's just the reality of living in America. So again, I hope your reserve fund game is tight. And if not, here are some tips, right, that we've given you tonight to make sure you get that house in order in that area of the work. Investments are an area we often get questions about. And you know, for public libraries, it's actually very straightforward. I just clipped the law for you here from General Municipal Law. So for public libraries, and that's municipal libraries, special district public libraries, and school district public libraries, you are all falling under this law. You have very limited opportunities to invest public dollars. And just a reminder that when you accept private dollars, so maybe you got a donation from a community member, donor or a grant from a charitable organization, the minute you take possession of that private money, it actually becomes public money. So the only way to have higher yield investments as a public library is to use perhaps the community foundation of the Hudson Valley to set up a fund for the library where the private dollars go. So if a donor came to you and wanted to leave the library money through their estate, which came to pass that year, if you wanted to have higher yield interest earned on that, that would be a vehicle you could use to do so. But you definitely would want legal advice on that aspect if that's something you're confronted with. Association libraries do not fall under general municipal law in this particular way, but this is definitely one of those instances in which I'm going to strongly recommend that association libraries very much follow the same pattern as public libraries, given the very high percentage of your operating aid that does come from public sources. I think it would definitely behoove you to follow suit in this area. I always think about what are the headlines I never want to see, right? And you don't want to see risky investments made by library with public dollars don't pay off. These are not the kind of headlines we want to get in the long run. So, a lot of what we're talking about here tonight is risk management as your job as a fiduciary and how you minimize risk for the organization. And so a lot of what we're talking about tonight is how you as a layperson on the board ensure that you've lowered the risk of something going wrong with the funds you've been entrusted with. So making sure the library has proper insurance, including bonding employees that are handling money. And we're not talking about perhaps your circulation clerk at the front desk who's taking in fines, but any staff person who has access to the bank accounts of the library, who has check signing authority, those are the positions you want to make sure not only when you hire them that they've already had a background check done, but there is bonding or insurance for that employee should there be malfeasance by that employee, which of course we hope never happens. Having inventories of items so that things don't disappear, shall we say, in the back of a pickup truck. Routine audits, we're going to talk more about audits in a few minutes, and business continuity planning, which is the current phrase of the day, to think through basically your contingency plans for what do you do if something unfortunate happens, if there's a fire at the library, or the one person in the organization who did have check signing authority gets hit by a bus and you don't know how to access your accounts. Like, these are things we should think through before something really devastating happens. So that's an area of work that you might have under a different name. It might be under a disaster plan or a financial continuity plan, but it's definitely something that you would want to review in light of the changing world we live in. And one of the resources I sent you yesterday through Kirsten was the IT governance manual from the Office of the State Comptroller, because a growing area of fraud and vulnerability is through the IT infrastructure that we all use for online banking and accounting and communication. And for anyone who's been part of a ransomware attack or hacking at an organizational level or even a personal level, you know how devastating that can be. And so these are things we have to do scenario planning for now, unfortunately. So thinking through, what are the backup plans? Where are the redundancies? How do we make sure we're controlling who has passwords to what? How do we limit use of credit cards or access to those online wire transfers? These are all things, again, that I think to be a good fiduciary have been thought through. This also relates to the issue of the internal controls that you have in place, and you might not even realize some of these things are controls, but they are. Your approved budget that you put in place every year, that's a control, right? It's a policy that you pass that authorizes your director and staff to spend money in certain categories up to a certain level. That's a control you've put in place. You've officially told them that's the cap in that area, and now you need to achieve the goals of the organization within that cap. You might have related policy to that there's a process to amend that or come back to the board and ask for permission to change an amount. But technically that is a control, right, that you've put in place, because you can't be there every day to oversee exactly how every penny is spent. That's exactly why you hire a director, is to manage the operations and the finances of the library on a day-to-day basis. Those budget status reports, getting those on a monthly basis, that's another control. Having that annual audit or review by a CPA, that's another control. And then I put here for you a curated list of policies that are related to financial controls in your organization. I think I did put this in your packet too in a larger way so you can read all of these and check them off. But you'll notice everything after the break, starting with the code of ethics, going down to inventory, fixed assets. These are all on the essential documents inventory that Mid-Hudson checks in with you about every year. And I can tell you that most library boards do not have all of the fiscal policies that they should. And it is the area that I would highly recommend you prioritize if you find yourself on the library's policy committee and finance committee, to make sure you have a full complement of these controls in place. It's the area, of course, that you want to be very careful of. And it's the area where if something went wrong and you ended up in the newspaper because something went wrong in one of these areas, it's one of those things that can severely damage the reputation of the organization, and it's very hard to recover from that. I know many of you on the line today live in communities where you've seen those kinds of headlines for other institutions, perhaps a fire district or a town clerk who had figured out a way to perhaps take and pocket some money from the public. Your trust in those institutions are so eroded that it results in, I think, not only negative press, but also just general mistrust of that institution for decades to come. People have long memories, and you don't want the library to have a memory like that associated with it. And these are the controls to have in place to minimize your risk, to make sure those types of things never happen. Keith, I'm going to pause there to see if there was any other questions that came through.
All right, so if anybody has any questions, feel free to put them in the chat box or the question box. We did have 2 questions come in while you were talking. So you had noted a facility that a library may invest into for higher yields. What is that service?
So I think that's related to investments and how money, just think about your own personal finance, and you might move some of your money into a CD because you'll get a higher interest rate. Or you might have a money market account or invest in the stock market, right? All those things have increasing levels of risk associated with them that the general municipal law does not allow for with public dollars. So you can't be investing public money in the stock market. That's not allowed. In fact, you can't even hold stock. So if a member of the community gifted you stock, you actually are required to sell it and have the money instead of the stock itself. So those are the higher yield options, which are more risky and therefore not allowed during general municipal law. However, the community foundation can use bank accounts and aggregate funds so that they can earn higher yield. So that's one vehicle, that's one example of how you might earn more on private dollars that are donated to a public library. Association libraries can do different things using financial managers to help them invest funds, but need to be extremely cautious with any funds that came through perhaps their 414 vote or a 259 vote.
So the community foundation, is that the community foundation of the Hudson Valley?
It can be, it depends on what region of the system that you live in. Libraries that are located in Ulster, Putnam, and Dutchess County, I believe, fall into the kind of catchment area of the Community Foundation of the Hudson Valley. Libraries in Greene and Columbia County are very likely in the Community Foundation of the Capital Districts region.
Okay, thank you. So hopefully that was an answer to the question that was posed. If that didn't clarify it, please please ask the question again or clarify a little bit. We have another question on this issue. Does a community fund vary its fee based on earnings?
Yeah, I'm only familiar with the Community Foundation of the Hudson Valley, and I believe it's a percentage that they charge you, an administrative fee, which I do believe is flat, but I certainly am not an expert on that. You'd want to double check that, and it may depend on the volume of cash we're talking about too. It may be negotiable, so that might be something to inquire about.
Okay, keep the questions coming. We got one more here that came in since the last break. If a bond anniversary has happened in the operating budget and the debt service is removed to cover the bond, and the board wishes to continue that amount for reserve or capital program for building improvement, and the tax rate will remain for that amount in your operating budget, what has to be explained to the voters before a vote?
Oh, that's a complicated one. I would
Mm,
say that I would need to see the language related to the referendum that resulted in your receipt of the bond to begin with. If it was a bond that expired at a certain date, then obviously there's a legal end date to your ability to continue to collect those funds. If it was done in a different way and structured differently, that might have a different outcome. So that sounds like a very specific question and that I'd be happy to chat with you about after the workshop, or it may mean you need legal advice, talking to bond counsel, which we can definitely refer you to help with that issue.
okay. So people are welcome to put in any questions that they have, either at the question breaks or as we go through things. That is all the questions that we see for now.
Okay, cool. Thank you, Casey.
You're welcome.
So I don't know about you, but not everyone loves spreadsheets, right? We've got some people who have that math mind and they love it. Their mind just clicks, 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 and they don't even have to like use scratch paper to do addition, right? And there's other of us who painstakingly break out the calculator and add things and quadruple check our work and never feel quite confident we got it. And that's okay because as my friend Jennifer Bollerman always says, gifts differing. We all bring different gifts to the table. And so you will have people that are very sharp and have a lot of acumen in this area, and you'll have other people on the board who don't feel as confident, but still have perhaps a different perspective or a different experience that you're bringing to the table to help raise questions or ask for clarification. And I think it's the diversity of that background and viewpoints that we achieve at the library board table here in New York that makes our board so strong and trustworthy. So I just wanted to give a shout out to those people on the call who maybe don't love spreadsheets and kind of groan every time they get the financial report. And just remember, we're asking you just do your best of what you feel comfortable with, and definitely respect and rely on your treasurer and your financial staff and your director, who are all working as a team to help protect the interests of the organization. It truly is a team effort. So I'm not going to let anyone off the hook on it, but also want to acknowledge that, as Jennifer says, gifts differing. So in your packet, I actually gave you an excerpt from the Handbook for Library Trustees of New York State on the role of the treasurer. Um, this role can look different depending on the type of library that you are. And in your handout packet, you'll see that itemized and explained. And so just very briefly, I wanted to point out that for public libraries, so those municipal public libraries, school district public libraries, and special district public libraries, your treasurer can be a paid treasurer who's not an elected trustee. This can depend for special district libraries on language in your legislation, so I'm not going to say carte blanche, that is the answer, but you'll see that explained in detail in that handout. So it is acceptable to have a paid treasurer and then designate one of the elected trustees as the fiscal officer who works in conjunction with that paid treasurer. And one of the things that you might realize or may not realize, depending on the size of the library that you sit in, we have libraries in our system that have budgets that are under $100,000 and ones that are multi-million dollars and tens of millions of dollars at the end of the day. And the level of oversight it takes to oversee, let's say, $7 million compared to $100,000, there's a different level, I think, of oversight that's necessary, and it becomes more complicated the more money that you have. And so you'll notice in our system that the larger libraries, the Poughkeepsies, the Mayapacs, the East Fishkills, those are big libraries. They're public libraries. They are most likely to have that separate treasurer role to bring more expertise to the table in the area of finance. Association libraries, you have flexibility in how you manage that, but you should have a trustee designated as the treasurer who is elected by the remainder of the board. So again, I just point out that handout that goes into detail on that. Your library might structure things slightly differently from the neighboring library, like down the road. Some libraries have bookkeepers, some have full-time staff that serve in a financial position. Others have like not only a volunteer treasurer on the board, but a volunteer bookkeeper and a part-time director, and you're all just trying to make it work. So it does look a little different from library to library. But I would suggest that you read through that section of the trustee handbook, get a feel for your type of library and the recommended arrangement. And if it looks different than what you're reading about, maybe give Casey or I a call to talk that through, because that's something that you want to have very clear division of labor and responsibilities made very clear to make sure you are getting the full advantage of the checks and balances that should be built in to those relationships. Another player in that relationship is a certified public accountant. And it is recommended that you have an annual audit done. Smaller libraries often stagger their audits. They might have an audit done every 3 years and have financial reviews done by the CPA in the intervening years. But if you are not currently engaging the services of a certified public accountant at any level, I'd say that's a red flag for your library. You want third-party oversight. You will also be asked for audited records by grantors and major donors, so it's something you want to have a fresh copy of. And I would recommend for the smaller libraries on the call that you not go more than 5 years without a full audit. Now, I know some of you understand the financial cost of having an audit, and it can be very expensive when you are a smaller library. But I would just remind you, going back to the third slide you saw tonight, that it's not your money. And it'd be more expensive not to have that oversight if something goes wrong than to routinely make sure you do have the appropriate oversight for the funds and the accounting procedures that you use. So again, larger libraries, you want to have an annual financial audit. Smaller libraries, you can maybe have a gap year or two and just do a financial review by a CPA in those intervening years. But your library board should have an audit review policy, so it's clear the pattern that you're on. Maybe larger libraries are adopting a policy that says we have an annual audit. Smaller libraries, maybe you have a policy that says we have an audit every 3rd year and we have financial reviews in between. But that is something you want in writing and clear. So when you have turnover on the board and in the director position, it's very clear the pattern at which you should be budgeting for and engaging with the services of a certified public accountant. So that type of audit is a financial audit. They're making sure the money matches up and it went where you said it went. There's a second kind of audit, which is a process audit that public libraries are subject to through the Office of the State Comptroller. That's often referred to as OSC. Library people love acronyms. New York State loves acronyms. Now, any public library on the call, municipal public library, school district public library, or special district public library, the Office of the State Comptroller has promised to come and audit you at some point in the next few years. So if your library hasn't already been audited by the Office of the State Comptroller, you can expect that that will happen in the not too distant future. They're fairly committed to it. And you'll see many libraries who have been audited. You can read their audit reports, and I'm going to show you where you can do that in a few minutes. But that's what we're going to talk about for the next few minutes of this meeting, is to make you help you understand what they'd be looking for. And it's really helpful for association libraries as well, because again, it's best practices for internal financial controls. You have a little less weight on your shoulders because they're not going to come knocking on your door, but it does provide structure for you to think through what it should look like when we're really holding ourselves to a high standard. Now, we often get asked about the New York State Nonprofit Revitalization Act, which was passed back, I believe, in 2011, which did create thresholds for nonprofits in New York State to require them to have an audit at certain revenue levels. Public libraries and association libraries technically do not fall under the Nonprofit Revitalization Act. The Office of Counsel at the State Education Department has ruled there is only 2 aspects of the Nonprofit Revitalization Act that apply to libraries who are governed by education law. And those are the conflict of interest policy that we just talked about earlier this evening, and the whistleblower policy, which we also talked about earlier this evening. So while it might be helpful to have a standard at which lets you off the hook to have audits done, the fact is that all of your libraries receive considerable amounts of public dollars, and therefore holding yourself to a high standard for that fiscal review, I think, is in your hands. So while you could use the thresholds in Nonprofit Revitalization Act, it is not a very solid legal ground to stand on, given that those aspects of that law have not been ruled to apply to the library community. So I just wanted to share a little story with you about a woman named Linda Vitone, who we work with at the Mid-Hudson Library System. She's on the eve of her retirement. We're all very bummed, but she's given us 20 years of wonderful service at the Mid-Hudson Library System as our financial manager and personnel officer. And when the Office of the State Comptroller made their declaration that they were going to come knocking on every public library door, they also included public library systems like the Mid-Hudson Library System in that group. And the Mid-Hudson Library System was the second public library system in the state to be audited by New York State Office of the State Comptroller. And when I heard through the grapevine of our organization that we had gotten the call that we would be audited, I immediately called Linda and I said, "Oh, I'm so sorry. I can't believe we're on the chopping block here." And she was so excited. She's like, "Oh, this is great. I'm looking forward to it. I want to make sure I'm doing things right." And in that moment, I realized how valuable Linda was to our organization. I'd always appreciated her skill set and her attention to detail, but that attitude that she welcomed someone coming in and taking a look at how we do things is really the mindset that I think the Office of State Comptroller is looking for as well, that you're doing your best. But of course, if you got advice from an expert, how wonderful is that? And that was Linda's attitude about the situation. Our audit process went great with the Office of State Comptroller, much thanks to not only Linda's work, but the work of our board and our administration to make sure we're extremely transparent. We had almost everything they were looking for right on our website, which they said had never happened before. So you'll notice in the new minimum standards that have been passed by the Board of Regents and will be carried out starting January 1st of next year, there's a little more transparency called for in what's listed on your website in the future. And so it's just something to think about, your board information, your fiscal reports, your budget, making sure it's very transparent and really owning the fact that you really shouldn't have anything to hide. And if you're feeling not confident about that, or that you are not sure if you should have something to hide or be worried about that, it just might be a sign that you need a little more expertise on your team to help you out with some of those issues. And we might be able to help you figure out how to get that expertise. So, I love visiting our libraries, and I often am struck by the director's office, or if a library is large enough to have a finance member of their staff, how often the financial records or records in general of the organization look a little like this. They're, got different generations of handwriting, and or maybe some of them were taken care of, and you've got great records for the past decade, but God only knows what happened the decade before that. And it always kind of struck me that how would you know, right? Like, how do you know what you're supposed to keep and how long you're supposed to keep it for? And it turns out there's plenty of guidance out there to let you know. And one of the documents you'll find in your handout packet is a list of the documents that if you were a public library, the Office of the State Comptroller would be asking to see when they come to do their initial assessment as part of their audit process. And I provided it for all of you because I think association libraries would find it interesting as well. And when you scan that list of documents in that handout packet, you might think to yourself, I don't even know if I have this, or I don't know if the director has this. Directors on the line are very familiar with that list, and they're, trust me, working to figure out where those documents are if they don't already know. But it's a good thing, again, to think about before OSC comes knocking or before an audit happens at your library. So again, just a chance for you to think that through and combine that with your knowledge of your library's record retention policy. That's one of the policies on the controls list that should be updated with some new information that just came out this year, which is that the New York State Archives has updated the records retention schedule for institutions like libraries. So if your records retention schedule has not been updated before this year, that's something to put on the to-do list for the library, because you'll need to upgrade the guidance document that the library is referring to know what needs to be kept to LGS1, which is an update from the MU1 or the MI1 that was previously referred to in your records retention policy. And if you're not sure what I was referring to at all just there, just make a note to yourself that your records retention policy might need to be up to date, might need to be updated if it hasn't been touched since this year. So on the state comptroller's website, which I just gave you the URL here, just in case you're a geek like I am and want to go take a look at other libraries' audits. You can learn an awful lot from them. And what they do when they come in to audit a library, or really any organization, is they're testing your processes and your procedures against this document, the practice of internal controls. And so two things that I sent you yesterday, and this is the moment in the workshop where I want to say to you, don't feel overwhelmed, because when you open up this document, you might feel overwhelmed. But I gave you two things. I gave you a link to this document, which is on the OSC's website, and I also gave you an inventory worksheet. So it's a Word document that we produced at Mid-Hudson that links to this document. So it's actually a worksheet for your board or your staff to use to say, okay, on page 1, item 1.1, this is what it says. And then it's got a space for notes. So you can say, yep, we do this, or looks like we do this, but we might have to fine tune this aspect of our procedure. Or a little note to yourself like, nope, we don't do this, we got to work on that. So it's a way to assess your controls in-house if that's something that you might want to do. Other libraries realize that is a very big undertaking, and they often will hire a certified public accountant to do a process audit for them. And that auditor may do that in their own way. But just so you know, that's a service you can purchase from a CPA to make sure your processes are good. Again, going back to the idea that you are maybe a board of lay people who don't have that financial background, and it might be a service that you budget for in an upcoming year, or you can take the DIY approach using the tool that we gave you in the email that you got yesterday. The other handouts that you have are that initial request for records that I just mentioned to you, and the key areas of OSC audits, because when they come in to do the assessment, they might recognize that you're doing a great job in one area and see a weakness someplace else, perhaps in how you're tracking leave time for the staff, and maybe they only focus in on that issue. And that's what you'll see when you go to look at other libraries who have been audited, that maybe it's a narrowly focused audit and just takes a look at their claims audit process or their online banking procedures. And then there's those libraries in some parts of the state, not here in Mid-Hudson, but in other parts of the state that are just big hot messes. And those audits are the most fun to read because they're doing a whole host of things wrong that you can learn from in those audits. But what I've done for you tonight is just to summarize the top 5 things that most commonly are found during these audits, maybe to save you some time. So you don't have to read all those audits unless you're looking for a good time. So the number one thing that the Office of the State Comptroller finds that libraries are not doing correctly is the claims audit process. And claims audit might be a phrase that you're not familiar with, but really it's quite simple. It's the review of bills before they're paid. And for public libraries, the full board is responsible for the quote unquote audit and approval of each claim, meaning bill, prior to it being paid. And this is sometimes done already in your process. Other libraries are in process of trying to get their bill cycles lined up with board meetings so this can happen in a timely manner. Other libraries still are sometimes paying bills before the board sees them, which is not obviously illegal because you're paying your bills, but it's not recommended best practice. So the closer you can get to a process that allows for that warrant officer of the board to take a look at those claims before they're paid and report to the board that they all look in good order, the better the Office of State Comptroller would feel you are doing in this area. And so they have tips for you in this area. And I also sent you the little handbook that helps you improve this process if that's something that you identify your library needs to work on, what it looks like, that every claim is adequately documented so that you're not just seeing a report from staff, but you're seeing a documentation of the invoice, the bill marked received, and then you're seeing the bills being paid by the staff. So again, it just builds your confidence that yes, this was a legitimate purchase from a legitimate vendor. And that's one of the things we do when we do orientation for our board to understand how to manage the warrant process. They're like, what do we even look for? How would I know? And so, over time, it'll get easier and easier. But if you're a new trustee asked to help with this process, what you want to look for right away is who money is being paid to. Is it being paid to a source that seems reasonable? Is it reimbursement to a staff person for something? Is it going to a common library vendor like Baker and Taylor or a bookseller? It's when you see a company that's getting money from the library that you don't recognize that you want to ask a question. So I see that there's a check being written to Joe's Vacation Fund. Is that a local business or is something going wrong here, right? If only they made it so easy for us. But if you don't recognize the name of a company, ask the question, who is that? Have we done business with them before? The more seasoned trustees on our board, they're very familiar. They know the common vendors that we work with. They know the names of the staff who may be getting funds and why they're getting those funds because we have documentation that explains it. So again, it's something that gets easier with over time, but the number one thing I'd say to a new trustee doing this work with your staff is to ask questions about who is getting the money. And if it's an awfully large amount, take a little time to look through the paperwork to make sure that it matches up with your understanding of why that money is being spent. So here are the details of the things that can be authorized for payment in advance of the audit for a claim. So your public utilities, electric, gas, water, sewer, and telephone, those can all be paid without board review prior to the payment. And postage, that seems very random, I agree. But the other things we noted earlier, right, were your personnel cost, right? Once you've approved the salary schedule for the year and your budget for the year, those checks can be written without prior approval by the board to make sure your staff is getting paid in a timely manner. So this goes on a little more, right? We talked about salaries, payments on debt, if you've incurred debt, which is fairly rare for most libraries with the exception of bond payments or mortgages. If you had a court order, which is very rare again, that would also be something that you would not have to audit ahead of time. Amounts due upon lawful contracts. So if you had a contract that was maybe with a vendor for 2 or 3 years or a 5-year contract, that also is something that can be paid ahead of time because you've already agreed to the amount and it's already technically been audited. And obviously retirement contributions for libraries that are part of the state retirement system do not have to be audited ahead of payment. So I think those are really, there's not too many things on that list, so you definitely would be seeing things that you have to approve on a regular basis, but this was something that was new to a lot of boards when we introduced this workshop a couple of years ago. So I've included it this year as well, just in case it might be new to you as well. I'll point out that you can establish a petty cash fund, and any director will tell you that, of course, there are things that happen in the course of running a library where it's unexpected, right? You might have an issue that crops up from a repair standpoint or a supply standpoint that we need something immediately for a program because we just ran out or we didn't anticipate something. So establishing a petty cash fund that is board approved, that also would become cash that is at the discretion of the library director to spend. And of course, it's usually a smaller amount, right? So if something went awry, it wouldn't be a federal case, but it gives it some flexibility to the realities of running a library, but also creates the guideposts of how that money is allowed for and spent. So you'll notice that the petty cash policy was on the list of your control policies that you want to have in place. Number 2 on the hit list of most frequently cited issues for libraries and OSC audits is cash handling procedures. And this is something that primarily your director oversees and creates procedures for. As we all know, most libraries are not dealing with a huge amount of cash on a daily basis over the front desk, but you do want to have a process and procedure in place that segregates the duties in terms of who collected the cash, who accounts for the cash at the end of the day. It is recommended from OSC that a library has a cash register so that you are coding in which staff person is collecting money and you can reconcile that at the end of the day. You can also compare fines that are recorded in the Sierra software with the cash register intake. So there's different ways, and depending on your library's procedures, it might look a little different from library to library. But best practice would have 2 employees counting the cash, daily bank deposits for larger libraries who take in more cash. Smaller libraries, I don't think you need to go every day, but you certainly want to have a rule in place that you don't want to keep a lot of cash on hand at the library. one of our former coworkers worked at a member library, and she was trained to go and make a bank deposit when she could no longer close the cash drawer, which is not a solid policy. Right? You don't want cash like hanging out of a cash drawer, which draws attention to it. You want to keep the amount of cash in the library fairly low, making sure you've got enough for petty cash and not overburdening the staff with bank runs. But again, being reasonable about that. And I think your director would be a good judge of that. Now, purchase and procurement was the next area that the OSC found a lot of issues with libraries, number one, not following their own policy. So making sure, A, you have the policy and then following the policy is recommended. Imagine that. But also noting that there are thresholds in general municipal law for competitive bidding. And this is something that sometimes just goes right by us. Like we just don't think of it this way because it's written strangely in law. So this is a note that you do need to go out to bid when you are purchasing a contract that will be over $20,000, and that's cumulative over the fiscal year, and that's where a lot of libraries got caught. They didn't realize that if they weren't buying $20,000 worth of IT equipment all at once, they had to go out to bid. So I think most of our libraries, this is not a usual issue for you. We have very few libraries that are buying anything at that level. Perhaps books might obviously be one thing, or an electronic resource. And you might be much more familiar with the threshold for public works contracts. So if you're hiring a contractor, you're required to go out to bid, obviously at that threshold. But I would recommend that you have lower thresholds for some of these to trigger going out to bid. Not only because it's the right thing to do in terms of making sure you've got competition on a more expensive item at the library that you're paying for, but also to just help you and the director understand the fair market value for something. So you'll see that many libraries have bidding or I'm sorry, procurement or purchasing policies that set even lower thresholds for requiring 3 bids on something. So it might be if anything over $5,000 requires 3 quotes on something to make sure you're getting the best possible price, or you're not getting extremely overcharged by the one vendor that maybe you've gotten a little too comfortable with. So you can definitely create a policy, and should create a policy, that defines at what point you need to go out to bid, perhaps at lower amounts, or if not bid, where you want multiple quotes for something to make sure that you're getting the best possible price and value for something. Number 4 is the lack of a credit card policy. Very common for a library to have a credit card. It's also very common that a library does not put a policy in place to govern the use of that credit card. So you'll definitely want to have a policy in place that makes it clear who can use it, what dollar limits there might be for purchases. You're obviously incurring debt. We don't often think of it that way, but that is technically what you're doing. So you want to make sure you're living within your means. Description for allowable purchases, and a description of the documentation that's required for reimbursement for the credit card. So these are hopefully things that seem very straightforward and understandable. I'll just point out my favorite, all-time favorite audit of a library, and thank God it's not in our system, was the Niagara Falls Public Library, probably close to a decade ago now. And this was one of many areas that they had trouble with. And my favorite part of the audit is when they described the inappropriate use of the credit card by the director, because she was buying her weekly personal groceries with the library credit card and then reimbursing the library later. And so there was this famous quote about that, no, you should not be buying ground beef with the library's credit card. There was no justification for that. So just an extreme example, but I think a very relatable example that it could be a mistake could happen, right? Your director maybe has their personal credit card and the library credit card in their wallet, and maybe by mistake uses the library credit card. That could happen, and you can easily rectify that. But when you see the authorized staff person using the credit card a lot for purchases that were not thought through well, that might be something that raises a red flag for your administration, and hopefully your policy creates the boundaries for your directors to course correct in that area. And the 5th area is something we mentioned a little earlier that might be new on the scene. There's newer documentation from OSC related to it, but it's the area of IT, or information technology. And it certainly has grown, right? The area of we no longer are keeping the library books in a handwritten ledger. We use QuickBooks or other accounting software for more complex library finance issues. So thinking through who has access to those accounts. Are you changing passwords on a regular basis? Who's authorized to make an electronic transfer of funds? Smaller libraries often have staff workstations, so staff computers that are shared by multiple staff people. You maybe don't want to have the financial staff person's computer shared with the part-time clerk who comes in and maybe just is checking her email and then all of a sudden has access to all the library's financial information and bank accounts. That would be something you want to protect against. And then going again to the idea of the business continuity plan. So for example, if all of your financial records are saved in QuickBooks on a PC in the library, what would be the backup plan if that PC was corrupted from a power surge or a fire or a flood, right? You'd want to have backups taken routinely of that information and stored off-site or in the cloud to make sure you have redundancies built in for your financial information. So we mentioned a couple of different policies throughout the workshop tonight, particularly on that sheet I gave you with the controls. So my advice to you, if you haven't done this in a while on your board, is to just do a little inventory. What do you have? What's missing? And then let's prioritize what's missing to make sure you get it in place. And if you need help prioritizing what's missing, just let Casey or I know and we can help you with that. So I'm gonna actually pause here before I get into compliance and Casey, see if we have any questions.
We did get some questions this time around.
Great.
So if anybody has any other questions, please pop them in the chat box or the question box. And we had somebody ask if there were a difference between preparing Form 990 versus a review by a CPA.
Absolutely, yep. The 990 is a form that some libraries need to file with the IRS. The 990 is a document that is basically a tax return for a nonprofit. And there's different levels of the 990 depending on what your gross receipt level is. So some smaller libraries are only filing what's called a 990 postcard, which has really not very much financial information on it. So a financial review by a CPA would be taking a look at perhaps a broader look. I think if they were doing your 990, they could do the review much quicker and it wouldn't be that heavy of a lift for them and hopefully not cost you much more than getting the 990 done. But I do think those are two different activities.
Okay. We have this one here. Does the Mid-Hudson Library System have sample copies of a conflict of interest form?
We do. We actually have one that was prepared by a lawyer at the New York Library Association. So it's a really good example to base your conflict of interest policy on because you know it meets the new law. And that's available on the link that we have in your packet and that we'll show you in a minute here.
All right, link in the chat box. Okay. How often should you bid out the audit?
That's a great question. And you should have it stated in your audit review process policy, how often you go out to bid. I would again perhaps recommend, and this is just based on experience, perhaps the 5-year mark that maybe you don't want to go more than 3 to 5 years without going out to bid, not only to test the amount that you're paying for that service, but also for a reason that I think is uncomfortable for some people to talk about, which is that you don't want your auditor and your finance staff people to get too cozy with each other. We had a situation a number of years ago in a library where the bookkeeper and the specific auditor from a particular firm, they got a little too close and the auditor was just assuming the bookkeeper was doing the right thing because they're a good person and not doing their due diligence to really analyze the books. So I think a little more formality in that relationship isn't a bad thing. And so sometimes switching up who the audit firm is, or at least the auditor assigned to you in a larger firm, is another way to create, I think, more, again, formality and lower risk.
Okay. Does the state comptroller's audit take the place of an outside audit?
It doesn't actually, because the Office of State Comptroller is looking at your procedures, whereas a CPA is looking at your finances. So those are two different types of audits.
Is it good policy to prepay utilities?
I don't think so. I think you should pay them as the bills come in.
Okay. And finally, this is the last question we have here, but please, anybody, if you have any other questions, please put them in the chat box or the question box. What about the debit card as opposed to the credit card? Are there considerations for that specifically?
I think, it needs a tighter policy because once you use a debit card, right, the money has been debited from your account, it's gone. Unlike a credit card where you have a charge where you might be able to dispute a charge that you feel was maybe made an error, or there's a return that needs to be made, whatever that case. So it buys you a little time, but I think if you do have a debit card and it's being used, you just keep in mind that that's a direct withdrawal from your account. And so that needs to have very tight controls over it.
Okay, so that is all the questions I see now, but I will keep my eye on both the chat and question boxes.
All right, great. Thank you for those questions. Those are great. So I just wanted to put the word compliance in front of you, and I blew up this slide in a larger page in your handout packet so you can read it better. But I just wanted to point out all the different areas where there is reporting being done, right? To make you feel a little more confident that there's many eyes on the finances of your library. We talked extensively about those monthly reports that you're getting. We talked extensively about the claims audit process and what you can approve in advance versus what you should be reviewing before it's paid. You have the third item there, which is related to the minimum standards for public libraries and association libraries in New York State, which requires you to present your budget annually. So just a reminder that if you have a public vote on your budget, that satisfies this minimum standard. If you're an association library that maybe goes a few years between votes, you'll want to make sure you have your budget posted on your website so the public has easy access to it. You've got three annual reports here. The annual report to the community, which is a narrative report that you're giving to the community about what you've achieved over the course of the year, and perhaps you're also reporting on how money was spent in the organization. Not uncommon to see a pie chart included in an annual report to the community so people understand how the money is spent, but I really highly encourage you to tie that to a narrative that explains the outcomes of how that money was spent so people understand the value achieved by the investment that they've made in your organization. Then you've got the annual report to the state, which, trust me, your director does not enjoy doing. And Casey does not enjoy that portion of the year either. It's a tough report, which includes both statistical data about the usage of your library as well as financial data. So there's another check and balance that's in place. Public libraries have to file a second state report called the Annual Update Document, or the AUD, often referred to as the Comptroller Report. So municipal public libraries, school district public libraries, and special district public libraries also file a second financial report on an annual basis with the Office of State Comptroller. So there's many spots here, right, for something to be revealed, discovered by these multiple eyes that are seeing these various reports as they're both created and then reviewed by the authorities. All libraries that have ever had a vote on their tax levy, and even if that vote was 10 years ago, you still have to annually file a tax cap form, and we're going to speak about that briefly before we close here tonight, so I'll save that one. Then you've got your audit document, or for libraries that maybe don't do that every year, you've also got your financial review document. And then for the libraries that have a 501c3 or tax exempt designation in the eyes of the IRS, or if you have friends groups that are 501c3 organizations, you're also filing a federal return, which was that Form 990 we got the question about before. So I put this before you not to overwhelm you, but to remind you that there's all sorts of reporting, there's all sorts of oversight happening. It's not all on your plate, but the controls that you put in place make sure you have clean reports going to the other authorities that are overseeing the finances and protecting the public interest. So I think it's rare for us to think about this as a body of compliance documentation, but it truly is. So the time, effort, and energy that gets put into these areas all are building towards the good reputation you want to have as an organization as good stewards of public dollars and public trust. So the tax cap law, just a real quick commercial for this. I put a very extensive answers to frequently asked questions document in your handout packet related to the tax cap law. There's also a recorded webinar you can watch at your convenience, which reviews the tax cap law for libraries, but just some quick talking points about it to introduce it to you if you're not familiar with it. This was a law that went into effect in 2011 and was going to sunset last year, rather this year, and has been extended indefinitely. So it's here to stay. What it does is creates an automatic cap to the amount of funds that could be asked for of the public. So you have a tax levy, I would hope, that's voted on by the public with very few exceptions in our system. That's how libraries are funded. um, Automatically there is a quote unquote 2% cap, which is not truly a 2% cap. It's actually generated by a 7-element formula. So you could estimate it with a calculator, but truly you need to use the form to calculate the true cap. That 2% can vary also with the consumer price index. So whichever is higher is going to be the actual cap amount. And you have to file a form every year that indicates what your cap amount is. Did you stay below that cap? And if your library needs to ask the community for more than the cap amount, that's completely allowable and very common. You just have to make sure your board has passed the proper resolution to allow for you to ask the public for more than the cap amount, and then the public still has to approve that as well. So it takes both a resolution at the board and a passage by the public. So there's a two-step process to exceed the cap amount. And I can share with you from the data we've collected that 100% of association libraries have exceeded the cap with 414 votes. And I would say probably 75% of special and school district libraries have exceeded the cap. And not because they're spendthrifts and they're out of control, but because I think of my own opinion, of course, is that in 2011, it's not exactly like libraries were well funded. So we still have a lot of libraries that are catching up from years of chronic underfunding. So again, going back to the word justifiable, is the amount you need to ask for justifiable? Can you point to the fact that you're not paying competitive salaries, or that costs have risen to such a degree, or that you have a major facility problem that you haven't paid for? These are all justifiable reasons for going through the cap. So if your eyes were glazing over as I talked about that, I'm not surprised, which is why I gave you so much backup documentation related to it, and also can refer you to a full webinar just on that topic if you want to take a deeper dive into it. Those are 2 resources for you on that topic. I just wanted to give you a brief commercial for your financial planning, and then we truly are done here. If there's any, I'll stay on the line for any more questions that we have. But I just wanted to put in front of you from a fiduciary responsibility standpoint that there are a number of items that need more attention from member library boards. We want you always keeping an eye on personnel costs. We want to make sure that you're paying a living wage and offering benefits to make sure that you're competitive, that you can retain quality staff. That's one of the most important areas to be investing in, because really, truly, your library is nothing without quality staff. And that needs to be I think, a methodical investment over time, which may need a multi-year strategy to get there. We talked extensively about facility planning, so I'm not going to belabor that, but I'll note 3 more things that are likely to need further investment in the future, which are e-resources. There's a growing demand for digital resources like ebooks, audiobooks, and e-magazines, as well as online courses. Program expansion is an area of growth for all libraries, and the appropriate level of broadband connectivity are all drivers for future financial planning. So I urge you to learn more about those areas and make sure your library is budgeting responsibly in this area so that you don't fall behind and really lose your market share, which oddly enough results in people not loving your library enough to come out and vote for it. So it's a vicious cycle when we start to fall behind in these areas. If that's something that you feel like your board needs help with, Casey and I can consult with you on that to help you get started. Your director probably has a lot of thoughts on that topic as well. So I would say don't be afraid of these areas, but do be aware of them and address them before they become big problems. So this is the link to the sample policies area of our website, which I think Casey's already put in the chat box for you. And of course, you've got the recommended reading that we sent you in the email yesterday. I've got my contact information here. I should have put Casey's here as well, but I bet you could find it easily on our website. I'll stop here because it is our scheduled end time, but I'm certainly willing to stay on the line and answer any further questions that have appeared. But for those of you who do have to sign off tonight, I'd like to thank you for taking the time to attend this workshop and learn more about your fiduciary responsibility on the board. We really appreciate the time and energy and care you take with your service to the board of your local library. So thank you very much for your time this evening. So
Okay.
Casey, were there any lingering questions?
So we had a couple of questions about the slides. Somebody was looking for full versions of the slides. I think we sent the notes, handouts kind of version of the slides. So
Yeah,
I was
we
thinking
can
that
send,
maybe,
yeah.
great, yeah, we'll send out the full versions as part of the follow-up email, which will come after the recording for this presentation is processed. We also had one, it looks like a comment. Our library uses a debit card. It is backed by a separate account with a low limit. We have a policy in place to manage the debit card.
Excellent, that's great.
Okay. We have a question here regarding benefits. Do you have info about best practices or thinking about the amount and structure of paid leave for directors and staff regarding vacation, sick, or personal time?
We actually are in the middle of a data gathering project. Directors are filling out a salary and benefits survey, so we'll soon have fresh data for you to see what common practice is. And I think it's an important reference tool for trustees to see if they are competitive in their area, to make sure they can attract staff who will stay and do a good job for them.
Okay, great. And we have a number of thank yous, and somebody gets nervous when the director talks about end times, which may be COVID related.
The end times, yeah, that's not a phrase I like either. I think the before times is becoming a very common phrase to talk about what life was like before COVID. But yeah, I don't think we're anywhere near end times. I think that the state, while being extremely conservative and reckoning with the realities that the economic shutdown had on the economy, you can certainly see the efforts being made by the state government, by the federal government, and the lobbying happening to I think everyone at every level of government is trying their best to figure out how to help the economy come back as quickly as possible. So I don't see end times, but I do see some volatile times in the coming 12 to 24 months. So I think we're not out of the woods yet. So being very careful and conservative right now is a very good mindset to have, more so than usual.
Okay, so we also had a question about the tax cap webinar, and I was able to find that link, so I'm going to share that with Krista, who was looking for it.
Cool. We can also put that in the follow-up email when we send out the link to the slides and the evaluation.
Okay, great. That's all I see. Another thank you, a lot of thank yous, and so it seems like that's it for questions for right now.
All right. Well, thank you, everyone. As always, I hope you know we're here to help. So any follow-up issues or questions that you come across, let us know and we can help you get set off in the right direction. All right, cool. Well, thank you, everyone. And Casey, thank you for helping everyone with tech issues and monitoring the questions today.
You're welcome, and thank you.
All right, cool. Talk to everyone later.